Good afternoon. This is Robb and Gareth John here for the 2021 Q3 Upper Manhattan Townhouse Market Report. Today is October 20th. We have broken our market report down into two separate reports now. We have the Townhouse report and we will have a separate condominium report. We're going to give you a brief summary now of the Townhouse market report with a lot of detail from Gareth. But keep in mind, on the 27th, next week, Wednesday, our written copy will come out. You can look on the screen here and download it from our website. That's going to get into a lot more detail than we're going to go over today. As we've told you before, we focus on Upper Manhattan. We focus on Harlem. It's specifically these 12 zip codes. If you're looking at these 12 zip codes, we're going to go from always, if you see a chart, we go from south to north. Something else that we do is we divide our properties into classes. 1 and 2 family homes are considered residential. 3 families and up are considered investment in our reports. And then we have the single room occupancy, which we hold out separately, and you'll see that on some of the charts upcoming. So with that said, I'm going to turn this over to Gareth, who's going to get into all of the data points that are going to make this video exciting. Go ahead, Gareth.
Okay, thank you, Rob. The news here is good. The market is in almost full recovery following the COVID-19 situation last year. Let's go into detail. So compared to quarters 1 through 3, so that's January through the end of September 2020, in the same period of this year, we saw 65 townhouse sales versus 48 last year. We saw $147.7 million spent versus $106.4 last year. That's a big recovery. So to put this into context, Q1 2020, that's January through March 2020, we saw 24 sales in Upper Manhattan. That's very similar to Q1 2019, when there were 25 sales. However, quarters 2 and 3 2020, there were just 25 sales in 2020, which is 37.5% below the same period in 2019 when there were 40 sales. Quarters 2 and 3 2021, we saw 41 sales. So that's very similar to 2019. So that's almost full recovery, but we'll see later that there are some kind of nuances there that we should kind of discuss. There has been market recovery post-COVID-19, and the big question now is the market going to exceed 2019? So let's get into some more detail now. If we look at a quarter by quarter graph of townhouse sales from 2019 through to now. Again, Q1 2020, there were 24 sales. That's comparable with 25 in the same period 2019. Quarters 2 and 3 2020, there were 25 sales. That was 37.5% lower than 2019 when there were 40 sales. Quarters 2 and 3 2021, there were 41 sales. So recovery with a trend, I think that, as you can see in quarter 3 2021, there were 28 sales in that quarter just by itself. That's a very large jump, and it suggests to us that the market it may be on its way beyond the levels we saw in 2019. Let's look at underlying prices, and this is actually kind of really interesting. If we look at analysis of price and price per square foot, quarters 1 to 3, 2018, 19, 20, and 21, we can see that they haven't really changed. That suggests that the market has been very stable. COVID hit, it affected sales numbers, but it didn't affect price. And that told us that the underlying market health was good and that the market would come back, and when it came back, it should be strong. Okay, looking at property class. So what did COVID hit hardest? Did it hit the residential market or the rental investment market? And which one was affected most? And has that sector come back? This is analysis by class, quarters 1 to 3, 2018, 2019, 2020, and 2021. You can see that on these four graphs here. The sales of 1 and 2 family properties, residential, were hit the hardest by the COVID situation. It went from 32 to 14 to 31. That's the blue bars you can see going from left to right. In contrast, the rental investment market, three family townhouses, that sector of the market was pretty stable, probably driven by changes in New York City rental laws, which we can discuss at another time. And I think we've discussed that.
We've discussed it. Look at our old videos.
Right. I'm going to hand over to Rob. Now we're going to switch over to how we analyse the market as it currently stands and how we use that to predict how the market is going to behave in the future.
Where we're going. All right. Thank you, Gareth. So where we've been, where we are, now what does this mean? The market analysis as we see it. So just look at it at a high level. There have been 70 to 78 properties on the market every month since January. 14 to 18% of those have turned over. So the market has been moving and it has been stable. Now, we do the monthly market updates every month. Here it is for this month. In September, we have 82 properties on the market, all of the brokers in Upper Manhattan, 82 properties. 21 of those properties left the market this month in September. 26 joined the market, 20 brand new and 6 relisted properties. So with 82 on the market and a 28% turnover, if we had, at a high level, if no one else listed their property, we'd be out of properties by late February.
Right.
We'd sell them all by February. So that's a pretty good attrition rate.
Right.
So to further explain where the market is going, I'm going to give you some more data.
Okay,
Gareth?
thanks.
Shoot.
Okay, you can see that it's traditionally following a market downturn, inventory is the first marker of a recovery, followed by sales. And you can see on the left here that townhouse listings went up following COVID, peaking at 91 as of November. So supply came back. Facing competition, sellers began to offer discounts. That's the center graph. Mm-hmm. And you can see that those peaked in February 2021 at 59% of listings. So supply went up, the sellers saw competition, they started to discount their properties, and then on the right, you can see that that's the number of townhouses going into contract. The supply and the discounts, buyers met sellers in the middle, they reached an accord and properties went into contract. We've been following this for years, and this allowed us to predict that the number of closings, number of townhouse actual sales would go up in Q3 of this year, and that's exactly what happened.
It is.
Okay, let's also finally look. So we've talked about recovery, and we've talked about time. We've talked about residential versus rental investment. Now let's finally talk about price, and this is kind of really interesting because it shows us that the recovery is back in some sectors, but not in others. So on these three graphs, on the left, you can see that they're all townhouses divided by price. So pink is under $2 million, green is 2 to 3, blue is 3 to 4, and purple is over 4 million. You can see listings on the left. You can see those in contract in the centre, and you can see those that actually sold Q1 to 3 on the right. If we look at listings of the 82 currently on the market, 63 are priced below 3 million. Of the 24 in contract, 17 are below 3. And of the 65 sales, 54 are below 3. So the lower end of the market is dominating now. So the recovery's been driven by the lower end of the market. The next year, we anticipate,
Yes. We think that definitely the 3 to 4 million is going to see a big spike in January at the latest, or April at the latest.
Yeah.
And then behind that would be any property sell. We sold in 2019 a property for, what was it, $4,750,000, 20 West 119th Street. Nobody has sold a property anywhere near that price since. So the 4 and up market has been pretty much dead. So we think it's going to return in April.
Okay, so I'm going to hand over from all those kind of numbers to Rob, just to summarize.
Okay. All right, so look behind me at how all the ways to stay in touch with us, all the ways to get on our off-market listing list and all that stuff. Look, we do this every day. We wake up, we're in this office at 6:37 in the morning. This is what we do. The market is back. If you're in the market to buy or sell, please reach out to us through all of these avenues behind us. We've been doing these predictions since COVID started. If you look through our videos, you'll see that we've been right on target with all of them. Don't mean to be a little cocky there, but we're good at what we do. So if you're going to buy or you're going to sell, get in touch with us and let us help you. All right, and we'll see you.
And thank you all for tuning in.
Yep, we'll see you soon. Bye-bye.